Welcome to the coffee shop, everybody. We are back again. Is this like video number 4 in 4 days, or like video number 5 in 4 days or something? To be honest with you, over on TradingView, I just put up 3 videos in just this morning. And it's not even 10 a.m. and here I am doing another video. And in today's video, we are going over hidden RSI divergences. Yes, I'm going to try and cover this quick, but you know these videos are always about 20 minutes long. I'm sorry. I hope you can be attentive because I really like you guys to stay informed. So with that, let me start my day with this. Got my little glass of tea, right? Time for the coffee shop, everybody, where I'm having an English breakfast tea, okay? Now, what you're watching is me do a live trade right now. What I think I'm going to do is I'm going to set up a video where I actually do a live trade for the morning, do the whole breakdown, do the whole setup, and I want to know in the comments below, do you want to watch me do a live trade on a 1-minute time chart? If you do, I'll record it, I'll speed up the video just a little bit, and I will overlay my voice onto the video, putting pauses in so that you guys can, just get a clear understanding. If I speed up the video, then you're going to hear all of that, right? You don't want that. I already talk fast enough. So what I'll do is, if you guys say yes, you want to see me do a live trade on a 1-minute time chart with an awesome strategy or a pair of awesome strategies, then yes, by all means, I'll do that. In the meantime, let us talk today about hidden RSI divergences. It's hard enough for you guys to know and see divergences, just divergences, right? I can see it clearly here. I have a high, I have a higher high, boom, price moves up. Great. I already know that that's going to happen. No big deal. Okay. Regular RSI divergences are easy to spot once you know what you're looking for. Hidden RSI divergences are a bit more difficult, and to be honest with you, they are even complicated for me to discuss, so I'm going to try my best to give you the visuals of what to do. And at the end of this video, I have a surprise announcement for you, so by all means, watch this video all the way through. It doesn't matter how long it's going to take. Watch the whole video. Trust me. You're going to be happy with the ending. The ending is big news. Big news. Okay, big news. Anyway, so yes, I have the Mass Effect moving average on my chart. I have a little bit more that I want to do to it, and then, maybe I'll release it today. But there's some other big news. So let's talk about RSI divergences. First things first, always, you know what you got to do. Go over, nope, I don't want to do that. Go over to TradingView like you all do, right? Go to your indicators tab, and in your favorites, you should already see the Heiken Ashi Algo Oscillator, right? If it's not in your favorites, then I don't know if we can be friends anymore. In the meantime, let's make it your favorite, right? Heiken Ashi Algo Oscillator, right? There it is. Community scripts. Boom. Good to go. Make it your favorite. Click the star. Okay. Go to the community area over there and, get involved in the conversation. Let's talk about a few things. Okay. You can do that. And then click it once, add it to your chart. I've already got mine on there. So default settings. Let me make sure mine are at the default settings. Reset. Good. Now, I'm going to strip off a couple of things that I don't need on my oscillator for the purpose of this video, okay? I'm turning off Bollinger. I'm turning off all of this stuff all the way down to Bollinger, buy and sell. All that stuff, I'm turning it off. I don't need it for the purpose of this video. I'm also going to turn off the slow stochastic and the fast stochastic. We will need the slow stochastic later on. So what I want you to do now that you have everything turned off that you don't need, I want you to go to the Inputs tab, go to your slow stochastic, and I want you to change it to these settings. You want 3, 3, 14, and leave that 50, okay? Slow stochastic is 3, 3, 14, and 50, okay? Now, you can't see it right now, and it's for the purpose of this video. I don't want too much on the chart right now to make things confusing. So now let's get into today's tutorial that will make you a trading genius. Okay, that was kind of anticlimactic. All right, so there's going to be some terminology in this video that will sound a little bit confusing, and I just want you to bear with me, all right? I'm also going to show you why. Two things. I'm going to show you why you need to know about hidden divergences, as well as why you need to analyze on a high time frame and do your trades on a lower time frame. All of you people who are scalping, you open your charts to the 1 minute and you guys get started and you think you're golden. You're wrong. And I'm going to do a video soon about why you guys think you are scalpers, but you are not. Instead, you're being lazy. So I may lose some friends for that, but hey, let's get into it. You know, I'm going to speak the truth. It's going to be hard information, and you guys are just going to like it in the end, because in the end, you'll make better trades. Okay? So anyway, let's get into this. Now, hidden RSI divergences are slightly different and mostly the same as regular RSI divergence. In a regular RSI divergence, like I said, you care nothing about what's happening inside this range. Don't worry about the RSI values, the highs and lows inside this range. The only thing you care about in a regular divergence is the RSI high in the high part of the oscillator, right, above plus 10, regular divergence, and the lows in the low part of the oscillator, the lows of the RSI, right? The lows are represented by the low wicks on your Heiken Ashi candles, okay? Now, I'm still at default settings. I really haven't changed anything other than that stochastic setting, so don't worry. Don't ask me what are the best settings. There are no best settings. This is just a minimum that you can use right now. So first, let me tell you what is a hidden divergence, okay? Regular divergence is this. You have a high, you have a higher high. Price moves up as long as, you know, your price is doing the same thing. If you have a high and a lower high, but your price is moving up, then price should be moving down. And you have to wait for that to happen. Now, that is a regular divergence. A hidden divergence, I can only show you a bearish one right now because price is above, right? It's above that range. So let's talk about bearish hidden divergence, okay? There we go. Now, here is one right here. First, let me find a low. I have a low. Heiken Ashi closes low below the moving average, right? So I'm going to say, hey, that's a possible low. I have a low on my price. Let me put this here, okay? You drew a trend, you drew a line, and you just left it there because you have a low Heiken Ashi that is below your moving average. That indicates a low, all right? It's got to be below the moving average. Now, you end up with another low below your moving average. This is the low one, right? So I mark this one here. And now I've got two lows. The RSI value is slightly higher here than it is here, right? It's sloped up. So on that same candle, I'm looking down, but I move my trend line up and I get to the low of that one. So this one's facing up, this one's facing up. What I have is an indication that I am going to move up. At this point, if you were scalping, you would simply go to, you can enter right away. You would simply go to, from the close of this candle, you would go to your recent high, and that candle would catch you there. That is scalping, okay? That's a scalp. Real short move, real short and fast. Now, the mass effect moving average will tell you where your most recent highs are, and you'll be able to scalp back and forth to them. So here you have a high and a high, right? They're matching each other. This is not a divergence. Now you have another low below the moving average here. This is a divergence. Why do I say that? Because above it on your price, right, you have a higher low on your price, okay? Higher low on your price, but a lower low on your RSI. This is a hidden bearish divergence. Hidden bearish divergence. Since we're not talking about hidden bullish, I don't want to put this up here, okay? I don't want to confuse anybody. There, we get rid of that, and we're good. Now, so hidden bearish divergence is when your price, when your RSI is doing this, but your price is doing this, okay? That's it. Hidden bearish. It's a bearish move on your RSI, but your price is doing a bullish move, okay? Now, What do you do with that? Well, first thing, let's do this. Let me reverse this, because here I said you need to find your RSI highs. Actually, in this area, you need to find your RSI lows. And down here, you need to find your RSI highs. I can't show you any RSI highs down here, so I'm just going to move that out of the way. All right. Now, you found your divergence. You found your price divergence. What do you do now? You mark the close of that first candle. The close of that candle is your first part of the range. Mark it right there. I just put a line, okay? Now, and you can see price actually moved up, and later on it came down and it hit that range, okay? I'm doing this on a 1 hour time frame. You are simply doing your analysis right now. So then you have a liquidity area right here. Remember what I said step 3 is? Look for your liquidity area. There's a nice long wick candle right here. I'm going to mark this one too. I'm marking this, okay, with a resistance or support level right there. Okay, so I got 2 lines. Great. For my sake, since you know, I need better visuals, I am going to mark like this. I'm using a box, and that box has the setting that says extend right, okay? And I can make this a little bit more transparent because, you know, visual is better. Looks good on my screen, not sure about yours. Anyway, so at that point, what you have done now is you have created a range. This is your range. To actually get into a short position, what you need is for price to close below this range with a nice momentum candle, okay? And there isn't one here right now. I don't have one. I have candles that close into this range, but what I need is price to come from the top, through it, do whatever it's going to do, and it has to close below this range. In that same moment, what I need is my RSI value to be below 0. RSI has to be below 0, and the Heiken Ashi candle has to close below -10. That is a clear move to the downside, okay? That's what I need to happen. But that has to happen on a lower time frame. There's your key, okay? So do your analysis, set up your range, set up your support and resistance, and then go down to the lower time frame. Then you can look for your entry point and your take profit, okay? So let's pretend this is not here. All right, pretend it's not there. Pretend that's not there either. Anyway, so I'm on a 1 hour. I'm going down to the 15-minute time frame, okay? Boom, here. Now I see my range again, right? What I'm looking for, like I said, is I'm looking for a candle to go. I'm looking for RSI below 50. Get out of here, you. I'm looking for RSI below 50 and a Heiken Ashi candle that crosses below -10, right here. Now, the only difference here is that you can plainly see that my candle did not even reach this range. But use the RSI formula, okay? Use the RSI formula. If you want to scalp this move, you could. A scalp for this would be, here's the candle that closes below -10, right? And you go to the close of that candle. You go to your swing high right there, right? That's your swing high. Give yourself a little breathing room outside of it, just a little bit. And your RSI, I'm sorry, you want to scalp this. So you would scalp it to your recent low right there. That line, the Mass Effect moving average is automatically giving you your low. If it's really close to your range, you can find the middle of your range. Take a parallel channel, put it there, draw a straight line across, and drag it down, okay? Remember how we did this in another video? So drag it straight down. Then take your take profit, go to the middle of this range, okay? And look what happens. Doesn't hit it here, okay? You see, it doesn't hit it. You do not hit your take profit. And you hit your take profit. also you'll notice that nothing came near your stop loss. Nothing came near the stop loss. So what do you do at this point? You are actually setting up for 2 entry points. First, you entered here. Where's this thing? So you just did an entry at this point. This was your first entry, okay? And I'm gonna color this yellow so you can see it. Now, shrink this down. That entry was here. If you notice, you have another entry right here, right? This crosses below, and you could take your RSI value from this point because, I mean, it'll just work. What is your RSI value here? 9.2, right? This is the first one. RSI value is 9.2. That is a 1 to 2.2. If I want, I can simply go to my swing high, which I'm already there, right? Swing high, and go 1 to 2.2. Now, why will this trade fail? I'm going to tell you why. You do a 1 to 2.2 if you are going with the trend. But look at my moving averages, okay? Look at my moving averages. I made them clear enough for you. Here's the 200 period moving average. Here's the 50 period moving average. I am clearly trading from between the two of them. So that means I need to subtract 1 from my formula. I'm going against the trend. So instead, I need a 1 to 1.2, right? Pull this back. Here is my new take profit right here. 1 to 1.2. And where do we get? 1 to 1.2. Again, I end up hitting that same take profit, right? So even though you took profit here, you can again take profit there. How do you know you can get this? I'm going to tell you real quick how to trail your take profit. First, you hit your take profit here. What is your new RSI formula, your RSI value here? What's the new one? Now, well, here it was 9.20. That gave you a 2.2, right? In this case, it's a 1.2 because you're going against the trend. You hit your take profit. Some people like leaving money on the table. So what did they do? They left money on the table. You look at your new RSI formula, which is now 23.21. I'm looking here, 23.21, right? There's 2 reasons why I take this. And one of them is because of a volume oscillator that is on the bottom of my screen, which you cannot see, okay? The new RSI value is 23.21. It's in the minus. That would be a 1 to 3.21. I'm going against the trend, so it's 1 to 2.21. I'm going to move this to 1 to 2.21. And that brings me down to here, 1 to 2.21. This trade will end down here. Now, I'm going to mark this area real quick. I just want to put a marker there. And I want to show you why this RSI formula is so cleanly adept to following how banking systems trade. I completely understand. I entered the trade early and it's going through here. It's bouncing around. I got another long wick. But what is the relevance of this level? Why do I get this level? Look to the left. Look left. Look left. Look left. I'm going to turn off the moving averages here. And look what happened at this level. Okay? This is how cool this RSI formula is. I just set this level. And if you look left, what's happening here? I'm going to take this one off. I'm going to take this one off. I'm turning off the box. I want you to see just what you need to see. Look at this. This is the new value, okay? Price came up, had trouble getting through it, bounced off of it, bounced off of it, bounced off of it, broke through it, tested off of it, came up, tested close, hit a divergence, went up, and this is price coming back down to this level. So price is doing this, okay? It's doing this. You are trading big time like a bank does there. Price will come back down to this level. So with that, I'm going to take my take profit and I'm going to move it just above that level to the open of the big candle right here. Give myself some breathing room. Live trade, done. You said you wanted to see me do a live trade. I'm doing a live trade. I already entered once. I'm at 117 profit on this one. Nothing's coming near my stop loss. Everything is still doing good, right? So my entry was here. This was the swing high. You know how I like using my Fibonacci tool. I go to the high and I bring the white line to the entry point. And in this case, I am going down to take profit 3 right there. Take profit 3 says I need to get out here, which is the high of this candle. So with that, put a marker, right? Now I'm just recalculating. Do this. This is the top of this range. I have just found the top of this range. And sure enough, this is a liquidity area. Orders were left in this area. Okay, there are orders left in this area. Price is going to come down, tap them, scoop up those profits, and then shoot way down. It's going to do that. Okay, so this is why a couple of days ago I was saying, do not get caught in this big bull trap. It's going to work against you. So that being said, I'm going to pull this out. I'm leaving this live trade running. I've got a lot of messages to get to, and I hope this was somewhat beneficial for you guys. Now, what I did not do in this video, I said I needed to change one thing in the settings. I forgot to do it earlier. This is an indication to let you know whether you should or should not get into the trade. For example, I said do the analysis on a 1 hour time frame. Then switch down to your 15-minute time frame and look for your entry here. Okay, look for the entry point on the shorter time frame. We had one entry here and we had another entry right here. 2 entries. The stochastic, I didn't have it turned on, but it should be turned on. The stochastic is set for, like I said, the slow stochastic, 3, 3, 14, and 50. Now let me turn on the slow stochastic. It should be red at both levels of those entry points. And here we are. The stochastic is red here at this entry level and red here at this entry level. This does not mean oversold on the stochastic. This area simply means a lot of force in the stochastic. This doesn't mean oversold in the stochastic. It simply means a lot of force in the stochastic. Now, something else that I notice here is, how do I know that this move will cleanly go to the downside? Well, look at the stochastic. You have a high here and a lower high here. What you also have is a high here and a low here and a lower low here. So the stochastic is clearly moving to the downside. Unquestionable, it's moving to the downside. Now, the only thing that concerns me at this point is I have a divergence here, maybe. I'm not sure. Let's see. I have this and I have this, a low and a higher low. Let me turn some of these things off so I can see what's going on. Here I have a low, right? Here I have a low. Oh, sorry. I have a low. And here I have a lower low on my price, which means something is going to work against me. I may not make it to this level. I may have already exhausted the move, and this entry would have been, a bad move for me. Who knows? It's because, let's see. Nope, not there, not there. Oh, actually, no. This divergence doesn't count. This divergence does not count because look at the oscillator. Look at it. Even though the low is here outside of the -10, the candle is inside the oscillator. This low does not count. It doesn't mean anything. Also, you can see in the background of the oscillator, that cloud, it's black. There is no momentum, no interest, nothing, and the candles are continuing to get smaller. So this divergence will not work against me. Looks like this is a clean positive trade and it'll result in a plus 330. I will take this down to this level, looks like. I am going to take this to a nice level of here. I'm going to take it down to right there, right here. I want to close this trade out at this level. Some take profit is better than no take profit. This is already the second take profit that I'm doing on this one. So I hope that was a beneficial video for you guys to understand a little bit about hidden divergences. I know I will need to do another one, but I wanted you to see how to do them. Where do you find them? Watch this video over and over again if you need to. And by all means, always go to tradingview.com. And you can find me there under the name of Coffee Shop Crypto. Okay? Ask the questions below, peeps. Let's do this again. You guys are a lot of fun lately. Thanks. Peace.